Hey, what's up? Welcome back to the channel. So I just realized that I've been talking about my stock portfolio and how I'm planning to grow it, but I never really explained what I actually do and how it works. If you've watched one of my videos where I talked about my financial goals, I actually mentioned there that one of my goals is to earn dividends from my stock portfolio. So I'm going to explain what dividend investing is in this video, how it actually works, who it is best for, and why I actually like doing dividend investing. But before we begin, make sure to like this video already because it helps a ton, and then hit the subscribe button and also the notification bell so that you can get updated whenever I post new videos just like this one. Now, before I can explain to you what dividend investing is, you need to understand what dividends are. Dividends are basically cash or stock distributions that companies listed in the stock market give out to their shareholders. Now, why would companies give out dividends to their shareholders? Now, one of the primary reasons why they do this is so that they can attract new investors, because when they buy the stock, it raises the value of it. Dividends are a great way to generate income for investors, especially those who are new and those who are not actively trading in the stock market, because most companies have a very predictable dividend payment schedule, and this gives an idea to investors on how much they're going to get paid and when they're going to get paid. Of course, we cannot dismiss the fact that companies who pay out dividends can also increase, decrease, or eventually stop their distributions. To keep it simple, dividend investing is perfect for people who are new to investing in the stock market because it doesn't require your constant attention. However, it does require you to do some research in some way. Because just like trading stocks, investing in dividend stocks does not exactly guarantee that you become rich overnight. There's still a possibility of the company that you just invested in going under and you end up losing all your money. With all investments, there are risks associated in dividend investing, so only invest the amount of money that you are comfortable losing. One important term that new investors need to know about is called the ExDividend Date. The ExDividend Date simply means the date without dividends. Basically, you will not receive any dividend payment if you bought the stock on or after this date. To put it in simple terms, the ex-dividend date is somewhat similar to a pay cutoff date. The hours that you work for on that cutoff date is not counted towards your coming paycheck, but it will be counted on your next paycheck. Now, there are other special terms that you're gonna come across when you dabble in dividend investing, but for now, we're gonna keep this simple and beginner friendly, and we'll just stick to one term for the meantime. And in the future, I'm gonna be creating more videos about this. So the next question that we should address is, how much dividends can you actually get paid? The amount of dividend you are paid is based on the amount of shares you own times the dividend amount declared by the company. For example, let's just say that you bought 100 shares at $60 on October 1st. Now the company declares a dividend amount of 20 cents per share for the month of October with an ex-dividend date of October 15. Since you owned 100 shares before the ex-dividend date, you are entitled to a dividend payment of $20. And let's just say that that dividend amount is consistent for 12 straight months. That means that $20 times 12 months equates to $240 in dividend payouts in a year. So your $6,000 investment in dividend stocks had a return of 4%. Now, what you need to know is that smart dividend investors leverage time to grow their investments. They basically use compounding to grow their portfolios much faster. And what I'm talking about is that they reinvest the dividend payout that they received back into the stock that they own. When you do this, you increase the amount of shares that you own, and in return, you get an increase in dividend payout in the next dividend payment. You just have to be disciplined enough not to take your money out whenever you get your dividend payments and spend it all away. If you are smart enough, you will reinvest it and let compounding do its work. So let's do some math right here and see how much dividend can we actually make at the end of the year. So right now I'm here at dividend-calculator.com where we can have our dividends calculated. So I'm gonna go over here, monthly compounded dividend calculator, because I do have monthly stocks that pay out dividends on a monthly basis. So that's where I would be going. Now let's just assume that it's 4%. The yield, the dividend growth rate is 0, so that for simplicity's sake we can calculate it a lot easier. Number of shares held, let's just say 100 for now. Cost per share is $10, and we're gonna hold the stock for just 1 year, and let's calculate that one. Now, as you can see, in the first month, we're going to be making $3.33. Now, if you reinvest this one, basically now your holdings will be $1,003.33. Now, once that happens, basically you're going to be making
$3.34 in the next month. And if you reinvest that again, your holdings increase again, and then your dividend income is going to increase as well. And that's one of the biggest advantages of reinvesting your cash dividends, is because you are basically multiplying or compounding the amount that you're going to get in the next month. And that's what I like about it. So at the end of the year, we will be making $40.74 with a total gain of 4.07%. Now, let's make another one. Right here, starting yield, same thing for the dividend growth rate. Now, the number of shares. Now, for the number of shares, let's go with 1,000. Cost per share is still the same. Years to hold, just 1. Let's see how much we're gonna make. Now, with $10,000, you will be making on average at least $33 per month. So that's pretty good already. And then when you keep on reinvesting in that amount to your holdings, it's just gonna keep on snowballing until you get to an amount where it increases, right? So as you can see here at month 12, instead of $33.33 that we're earning each month, or around that area, we're now making $34.58. So at the end of the year, you will have made $407.42, and that is basically 4.07% return. So that's pretty awesome. Now, I want to actually look at a person, and he's very famous. He is Warren Buffett, this guy right here. And I want to look into him because he's very famous when it comes to like dividend investing. He basically invested in Coca-Cola back in 1980s or 70s. And then after that, he kept on buying and buying Coca-Cola stock until it reached 400 million shares. And I believe he stopped around late 1980s or early 1990s. So he stopped buying shares, and he's just collecting dividend checks basically. But with all those investments, he basically averaged around $30.25 per share per Coca-Cola share. So let's calculate that one. Let's just assume it's Coca-Cola is returning 4%, and then after that, number of shares 400 million, cost per share is 3.25, and we're just gonna hold it for 1 year. Calculate, and boom, he basically makes at least a 4 million. Is it a 4 million? Yeah, it's 4 million. That's 6 figures on just one stock. So that's really crazy. So imagine if he actually reinvests a 4 million every time to the stock. This is what he would have earned, 52 million at the end of the year. But since Warren Buffett doesn't actually reinvest it anymore, so he's pretty much getting this amount of checks every month with Coca-Cola. But I think Coca-Cola doesn't actually pay out monthly, so he basically gets around, 12 million per quarter. So that's pretty crazy, right? So this is why I love dividend investing, okay? My mindset about money has changed throughout the years, and dividend investing has become more and more appealing to me. I get to learn more about the stock market, how it works, how everything ties in together, in a financial sense. I get to learn more about business and some economics here and there. I get to learn about industries, sectors, and whatnot. And I get to talk to my friends and to other people about something that I really love doing. But most importantly though, I get to make my money work for me, and that's the most important thing, and that's why we did dividend investing in the first place. And it is in my plans in the future to kind of like make my investments pay for the things that I need or want, like bills and luxury and what have you. So that's it for today's video. I hope that you learned something new, or maybe even just a little bit about the cool and awesome world of dividend investing. If you have any questions regarding this video and my previous videos, let me know in the comments below. I'd love to answer them because it helps you out, and it helps me out to basically a feedback system for me. And before we actually end the video, I'd just like to point this out that by any means I am not a financial advisor. So please do your own research when you plan to do this thing. All the things that I said in this video should not be construed as professional financial advice. Everything that I said here is for entertainment purposes only. I am simply sharing my experience and my current knowledge about dividend investing. Moving on, if you haven't done so yet, please subscribe to the channel, hit the notification bell, and also like and share this video to a friend of yours who's looking to put their money into good use or looking to increase their cash flow. Also, add me on Instagram
at Daily Dredd. I'm pretty much active there on the stories. You can send me ideas there. You can send me DMs or articles that you'd like me to check out. And or if not, you can just talk to me there. I hope you have a wonderful day, and we'll see you in the next video.